Hello, everyone, and welcome to our second episode of ValeTalks, powered by Valetax. In this first episode, my guests, in this case, Rion, Manesh, Patel, and myself, will be talking about the future of trading and technology, a new era of human and AI collaboration in the financial markets. As I mentioned, I'm going to be your host for the second episode of ValeTalks, and as guests, we have, first of all, my dear friend, someone that I admire quite a lot, Mr. Manesh Patel. Could you please, Manesh, give a quick introduction once again for this second episode?
Hi, I'm Manesh Patel. I've been trading since 1996. Retail trader that went professional trader, worked in Wall Street, left Wall Street, pretty much managed my own money, trading today and trying to help people turn that corner from being a retail trader to institutional trader. Having a lot of fun with it and then enjoying it. And glad to be here.
Awesome. Thank you, Manesh. And now, Mr. Rion, Mr. Innocent Ifere, that is our senior market analyst for Africa, great trader and a great friend of mine. Could you please introduce yourself with the audience, Rion?
Thank you very much, Alfredo. Hi, everyone. My name is Innocent Ifere, popularly known as Rion. I'm a market analyst. I've been trading for over 5 years now, closing 6 years, or 6 years per se. And I like to major myself more on psychology and understanding market sentiment as a whole. So I'm still growing. Yeah, thank you very much.
Awesome. Thank you, Rion. And well, lastly, myself, my name is Alfredo Marientes. I am the market analyst, the senior market analyst for Latin America markets and region here at Valetax. I have been trading for the last 6 years. It seems a little, very little compared to Mr. Manesh, for example, with his over 30 years of experience. I have currently pursuing, almost done with a master's degree in stock market studies and financial markets trading. And it is a pleasure to have all of you here for this incredibly interesting topic. I was very interested in bringing this topic to our ValeTalk series because AI, as we all know, is completely changing the entire world. Not only the financial industry or any other industry, it is changing the whole world. And Mr. Manesh himself has very nice insights on how it is being applied into trading and financial markets. So this is going to be a really, really interesting topic and episode to talk about. We will start first with the tools that are shaping the modern trading. Then we go into how institutions are using AI today. Then the human AI hybrid, having this new type of trader for the future. And lastly, we go into the live Q&A for the session. Starting with our first topic, our first insight into our episode, we're going to talk about how AI is not the future, but it's already being used by the biggest names in finance. We are already seeing smart indicators, auto-risk tools, strategy backtesters applying and utilizing AI inside them. We have the smart order routing that is used in real-time dashboards and the reinforcement in learning bots that is in development. I'm going to give you, before we go directly into the conversation, some examples in institutional cases. We have examples on signal generation, portfolio optimization, sentiment analysis, execution in algorithms, and compliance automation. Specifically, BlackRock, for example, is using what is the name of Aladdin AI. Aladdin AI is mainly focused on portfolio and risk analysis and predictive models applied to financial markets. Citadel 2 Sigma is using deep learning models. This is for pattern recognition and reinforcement of learning through execution on the portfolios. JP Morgan is using the LOXM, that is an AI-driven order execution that learns microstructure inside the markets mainly to reduce slippage. And Bridgewater that uses AI for stress scenarios on extreme macroeconomic scenarios. Now, going directly into the first conversation that we can have, all of us, could you please, Manesh, tell us how AI is being used nowadays in institutional and in the financial world?
Yes. Let's step back a little, and because AI is such a big word.
Mhm.
It's different for everyone. Uh, to me, AI is different for Ryan. AI is going to be different for you. AI is going to be different. So that terminology is so widely used. It's incredible. A lot of people think AI is brand new because of ChatGPT and stuff like that. However, AI has been in trading for years, especially in the institutional side. A lot of people don't know that it's been on the institutional side. Before it used to be called machine learning. So AI is the new word now, but if you look back at history and you do Google searches on it, machine learning is pretty much what it used to be called. A lot of institutions like JP Morgan, Goldman Sachs, and other institutions around the world were hiring quant engineers for machine learning, which is pretty much now marketing word called AI. Um, and there's different forms of AI out there. There's in my belief, remember, and it varies from different person to person to person. There's two types of AI models in the trading world. One is the traditional, statistical based, which is based on the open, high, low, close of a bar, right? So you analyze the open, high, low, close. You look for historical patterns in the past, and then you look at the statistics for those, and then you're looking for them to repeat. So you're trading probabilities with that. The second type is more towards like what Ryan was talking about, more on the psychological side. And those are more behavioral finance type of models where they analyze human behavior, especially greed patterns, right? Where you could sit there and know that you could let someone win a couple of times. They're going to sit there and start going in completely. They get your position size more and more and more. And then the greed kicks in. And at that point, you could make that instant go straight up. And then you make money going the other way. So there's patterns out there, behavioral finance patterns are more psychological based. So there's those types of models that are there. Um, the institutions are doing a lot of behavioral finance models, pattern recognition models, and stuff like that. On the retail side, you typically don't see the behavioral finance models at all. You see a lot of robot trading, which is based on automation of strategies. And that's literally what you see on the retail side is AI is literally just an automated strategy for a AI indicator based strategy. And you're working the probabilities. And a lot of people like the robot trading or AI trading from the retail perspective because they are making money. And one of the big differences they're making money is because they're not involved. And as you get involved as a trader, uh, you have your emotional side kicks in, your greed pattern kicks in. So you typically don't trade that trading plan in and out, whereas a robot will trade with no emotions at all. So if I have a strategy and put it and say it's AI and put it into robot trading, believe it or not, that robot trader will make good results compared to me physically trading it. So a lot of the AI models now are indicator based and just trading probabilities, and that's what it is. But to me, I think, you know, as you look at ChatGPT was good at the very beginning. Now, when you start using it more and more, you're getting a lot of false results. And the reason why is AI is only good as what you feed it in. So if there's more junk coming in, you're going to get more junk results out there. And now with AI on the trading side, we're getting to a point it's going to be very dangerous. because if the AI models don't involve volatility, that's going to be a new aspect that's going to come in. And, these models are supposed to be self-learning, but with volatility, it changes. Sometimes you have a little volatility, then medium and a lot. So a lot of things can happen and stuff like that. Um, so, I think we'll talk more about the specifics and stuff like that, but this is a topic I'm sure all of us could talk all day long,
Yeah.
and go in and out, but there's so many aspects of it. But, the key thing always is that when you get involved with any of the AI models, you have to look at the statistics. What is the reward risk ratio of those models, right? And that's what's really going to make a difference because most, and remember, my background is programming and we created machines that did 40,000 trades per second. And,
Mm-hmm.
I went into the institutional world as a programmer and a trader and thinking that automation in trading is the holy grail, right? But I left knowing one thing is that without the psychology, without the money management built into these models, you're really not going to have the ability to have a system that could do more than 1-to-1 reward risk ratio. And that's what you're going to see is a lot of these models that you see out there are really, when you turn them on the back testing side, they look great. But when you turn them on in a real live
Real
environment with
markets.
all the slippage, you're only going to average 1-to-1. And that's where you're going to have issues a lot.
Mm-hmm. And I still believe that nowadays there's sorry, nowadays there's a lot of EAs, the expert advisors that we call them for MetaTrader, right? That can develop really good during some seasons and during specifically to some time frames, but they still need these human adjustments and
Yep.
optimizations that only the human will able to recognize that, hey, maybe during this season that the market is ranging or that the market has been extremely bullish or bearish, there are certain adaptations that will be needed to adjust in these cases. So I am a true believer that it is a very good edge to have your strategy completely automized, like completely done into an advisor, because you take all the psychological and emotional aspect of trading aside. You are now
Yep.
not the one responsible to execute, to close, to manage. However, you still need to be there and to adjust and to optimize. In that sense, I believe that that's the intelligent way to do that. But please
Yeah.
let me
And
know, Ryan. I'm sorry,
I'm sorry.
Manesh. Go ahead.
Sorry. I just want to make one comment. I mean, I think you hit it right on the spot. Use AI to take the psychological part of your trading out, right? Take the emotions and all the stuff. Because if you could, as a human being, execute your trading plan, you could completely be successful consistently. But the problem comes down to, and I'm sure Ryan will allude to this from the psychological side, is you interfere with that trade so much. And that's not good. And that's where AI can really help you is on the psychological part of trading, which most people don't realize. Sorry, Ryan.
Yeah. I think I'm having a bit of a coverage downtime today. But yeah, back to what we were saying about AI, yeah, and I totally agree when we talk about AI in terms of psychology. And I have two main viewpoints when it comes to AI. Yeah. I tend to look at it first as either we have an expert advisor or we have an executor. So an expert advisor literally just tells you, okay, it's programmed at the end of the day. It tells you if A and B happens, you're going to get C. The result for A and B happening is C. So every time you find A and B, what I would do is to go into the market and locate A and B so that you can then execute and get the result. Then we have the executor. Now the executor is, the one that really helps with the psychology part, especially for traders that usually they have a problem with executing trades or probably get into a trade, get scared. A lot of people leave winning trades and hold losing trades. So if you can actually have an AI that execute for you, that also helps your psychology. But amongst other things that I would completely agree with what you've said and what Alfredo have said is AI has been existing through that. BlackRock has been training their model for over 20 years now. It's something that has been in existence. But like Manesh said, the more junk that is being put into AI, the more junk it gives out. And that's why you see ChatGPT has an issue of always accepting whatever you tell it and agreeing with you rather than helping you refine. So when it comes to AI, another thing people need to understand is that it's still a computer. It's still the whole computer system. It's garbage in, garbage out. So if you can't give it the exact thing you need it to give back to you, then it's going to keep giving the rubbish you're giving it. And it's one of the results where I see a lot of people trying to use ChatGPT to take trades these days, but not realizing that they also need to be aware of the market conditions and also aware of technical analysis themselves to be able to understand what they're trying to prompt ChatGPT to do. I've tried using ChatGPT to trade, and one of the major things that I usually would do is I would send it, maybe a breakdown, like a written breakdown of what I have in view for the market, and then ask it to go online and also pick, analyses and breakdowns from other people and put it in alignment to how my own analysis comes up. And then I can then take from whatever analysis it's brought to me, probably from FX Street, Wall Street Journal, and all of those kind of articles and people writing. And then I can now see that I'm not the only person who has view or sight for prices to move towards that direction. Now, what that helps me do is confluence. Okay, so it all depends at the end of the day how you choose to implement AI into your trading, because at the end of it, the most important thing is to create like a hybrid environment for your trading system. So you use AI as a confluence, but still with the knowledge that you have. And I remember when we were supposed to go to South Africa for the SVS Summit, Africa Summit Expo. My topic of discussion was AI and how the human factor is still important when it comes to trading the financial markets and everything. Because some people are starting to think AI is going to do the job for them. And I always tell people, I say, BlackRock, JP Morgan, all of these people have machine learning. All of these people have AIs they've been using for a very long time. But how is it possible that they still retain people who work for them? Their risk team are still human beings. They still have traders on the floor. And all of these things is to show you that as much as people are going to try to depend on AI in the long run, there's still a need for human beings to also understand that AI would not be AI if you don't feed it data. So there's a prerequisite for you to actually know what you're doing before trying to use data to enhance whatever it is that you're trying to implement. So be it studying, the greed and fear index has been existing for over 25 years. How has it been calculated? Machine learning, so it has always been there. We just need to know how best to impute it to make our work better.
Completely agree. Completely agree on everything. I believe that at the end, even though there are a lot of algos and EIs and bots and automated trading strategies out there in retail and institutional level, behind every single strategy, every single bot, there's a human being that created, that is feeding the data. So at the end, the market is still completely based on human psychology.
I
believe that
we're not going to be archaic. We're still going to have a job.
Exactly. That's at the end. That's kind of the point that we're slowly getting to, is that AI is not a replacement. It is an improvement, an enhance to what we do and to what we are as traders, but it will not be a replacement.
A lot of people still think it, though.
Yeah.
I think people who think about it that way are actually people who have been lazy traders, especially traders who have built their lives so much on using signals and and all of those things. They just believe that AI is just going to make it more easier for them to be lazier. So
Ryan, they want a lottery ticket.
Yeah, pretty much. And then moving into this slide that talks about the implications for directly for retail traders. Institutional AI is not invincibility. Retail can still gain edge through structure, systematization, and risk discipline. As Manesh Patel said previously, without a psychology and without a risk management, at the end, it is not going to work. Even though you might have the systematization and the structure in place, if the risk is not there, if the psychology is not there, it is not going to work, right? You're not going to be a profitable trader, as easy as that. So of course, there's ways in which us, the retail traders, can gain an edge without having the power that the institutional AI will have, right? We can. There's a lot of ways of implementing new tools or implementing strategies and gaining an edge in the real markets by being retail at the end of the day. And exactly as we were mentioning, this is an increase, an augment, but not a replace. AI helps humans manage pressure and emotion because what we're mentioning, you take the emotional aspect aside. You have this ability to execute immediately when all the conditions meet, and you take all the psychological aspect aside. So in that sense, of course, it is an improvement for every single trader, right? Algorithms don't dream, hesitate, panic. Humans do, right? However, the humans are the one that will give the context to the algos. As we were mentioning, the human is still necessary behind every single tool, every single bot, every single AI. And at the end, the idea is to use it as an improvement. The future trader is combining an intuitive mind, our human nature, with the machine and the algorithmical precision. What are your thoughts on this, Mr. Manesh, Mr. Rion? What do you believe?
I mean,
okay, I'll let Manesh go.
Yeah, so
Or should I?
it doesn't matter. I want to make a couple of comments towards this, right? And these are things that we've known in history. You believe it today in your outside trading world and everything. And one thing is, remember, you cannot control this market. Okay. And a lot of traders go into this philosophy they can, and they think with AI, they can control this market. No one can control this market, not the institutions, not you and I or anything. All we could do is place the orders, let them get filled, the manager trade there, and that's it. Right. And the biggest thing I see a lot of people do is if you can't control the market and you use an AI model on one instrument, how are you going to make money? It just doesn't make sense. You're going to go in, out, in, out. And at the end of the day, you're just burning commissions. You're burning a lot of headaches and stuff like that, right? It still goes back to the philosophy of follow the money. You got to figure out, right, what is moving and then get in it. And that's the key thing is diversification is really, really what matters, especially in AI. Because if you're using AI for one particular instrument, it's not going to be effective. Even you trading one particular instrument is not going to be effective. You need to go what is moving. And that's what a lot of people don't understand. And the people that are only trading one instrument are pretty much trying to control the market, and it's not going to work. You need to forecast what's going to move and then use your models, AI models on it and be diverse. Today, it could be gold. Tomorrow, it could be silver. Tomorrow, it could be Bitcoin. Tomorrow, it could be the dollar denominated currencies or yen currencies. So you need to follow the money in that. And that's the institutions. If you look at the institutions and they're running AI in-house, not outside that people see. If they're running in-house, they're running on a basket of instruments and they're seeing which instruments are moving. And then the AI model is going pinpointing to that particular instrument and trading it. But they're forecasting what's moving and they're diverse. So they have a whole bunch of a basket of instruments and that's what they're doing. But as us retail traders, we don't think about diversification. And if you really want to get into AI and get involved, you've got to follow the money and be diverse. That's one comment I have to make from a high level.
I believe that's a really good advice because at the end, yeah, that is completely true. Institutions have pretty much a department for commodities, another for equities, ETFs, options, futures. You need the diversification as a trader, as an investor. You need different instruments, and especially as you mentioned, if you're have gaining an edge through an AI or even just a combination of indicators that might pinpoint a signal, it is intelligent to have it applied into not only one asset that might only give you 10, 12, or 20 trades a year. If you can apply it to 100 different instruments that can give you as a sum 300 or 100 trades per year, right? So you just increase the repetitiveness of your strategy and of your trading by extending the amount of options in that sense.
And I mean, if you look at it now, Ryan's actually sitting on a gold mine. The hottest global market in the world right now is South Africa. They've been going up 45% in the last 6 months. So you could buy something there, close your eyes and do nothing and still make money.
I was not aware of
that.
that.
When it comes to when it comes to the retail side of using AI, if there's one comment I want to make is I think retail traders need to get to a point where they ask themselves the hard question, which is, what do I really want to achieve with using AI when it comes to my personal trading? So now I'm looking at AI from a retail trader's personal use, not just the institutions or how the institutions use them. I mean, when we talk about AI, we could, like I said, talk about expert advisors. We could talk about all the trading robots that are being sold currently and all of these things. Yeah? So it all boils down to, how do you want to use AI as a trader for your personal self? For some people, it might be wanting to gain more information as to improve the level of clarity before they take a trade. For others, it might be they want to use AI for the fine tune their trading strategy to have a better edge. So it wouldn't always be just about having an AI to execute. It could be an AI to make more informed decision. It could be using AI to generate a trading should I call it a trading indicator, for instance. If you're using the MetaTrader or the Trading View, you could create like a code. You could use AI. You could tell AI what exactly your trading strategy is, explain how you want it to happen, the best kind of market conditions that it would best work for. And you can use that to kind of create like an indicator for yourself while you're trading. It doesn't have to be anything too glamorous or too big or institutional wise. So there are a lot of ways retail traders can actually take advantage of AI. But like I said, it's all about sitting down and asking yourself the hard question. What do I really want to achieve with AI? How do I want AI to help me in my trading? Personally, for me, I would say because I enjoy trading. I enjoy being a trader. I don't think I want someone else to take the experience and everything away from me, because I like to feel the emotions. I like the psychological warfare. I like all that is what makes me a trader. So if I'm looking to outsource that to an AI, then that doesn't make me a trader any longer. It doesn't make me feel like a trader any longer. So I would rather prefer to use AI to gain more information, so I kind of bring more clarity to my analysis in certain ways. That way, that's how I personally would use AI. So it all depends for the retail trader. Choose what works for you and what you think is what you need at the very moment. I mean, our needs on this call are completely different. Manesh right now could be thinking of going to, probably another concert somewhere in the world. Alfredo is thinking about how he wants to make $1,000,000 or $1 million, and everybody has. So you just need to find a way to impute AI into what your goal is, and then make the best of it, and make sure that you're also prompting and feeding it the right data in order to get the right results, especially for retail traders.
So, Alfredo, I don't know now or maybe later you're going to ask us, but um, maybe one scenario that could help the audience is, okay, how were we trading before? And, Ryan goes for it and I go for it. What was my experience before? And then how is it today with AI? So we could give our history of what we were doing before and now how AI helps us today. I think if we
Hmm.
give that exact example today, that could help people with a little insight. I'm not sure if you're going to ask that later on or not, or something.
I believe we can go directly into that. I mean, we can. I believe it's as you mentioned, it would be really helpful for the audience and overall for the topic. Maybe we can go directly into that conversation and how it was before and how, by using it at the after, right? The before and
Yeah,
after and the improvements. Maybe you can start on that, Mr. Manesh.
yeah. So I mean, I think everyone needs to hear real world examples, right? And how
Totally.
AI, what were we doing before, and what are we doing today? And, so as a retail trader, you always look at charts, you trade based on your indicators and strategy and stuff like that. When I went to work in the institutional world, it was completely different philosophy. And that was the thing that really woke me up. Because as a retail trader, I was never really diverse. I'll trade a couple of instruments here and there. But that didn't happen when I started managing money on Wall Street. And literally what you do is, remember, back this is where I'm showing my age again. I've been trading for over 30 years, so computers were still just getting going. There was no trade view. MetaTrader was there, but so there was other charting platforms back there, and it's a lot harder. But when you're managing money in Wall Street, and literally this is what we had to do every night. We had to go through the S&P 500 stocks, currencies, futures, and everything. Go for those charts, okay, and see which one of our those charts have our strategy on them. And our trading plan had 4 time frames involved. So literally for every instrument, I had to look at 4 charts and then go through over 700 instruments every night, and then have a list of those instruments to trade the next day, right? So next day, now I have the list of instruments that are going to move, and right. And remember, you're managing money. Okay. So it's a different perspective. So now as soon as the market's open, boom, you're in front of your computer. You're looking through those particular instruments only, and you're looking at your strategy to get executed. Okay. So literally from 9 to 4, you're doing that. Then you go home, you get a little bite to eat. Now you're back to doing research, going through everything over and over and over, seeing what the list is going to be for tomorrow. So as an institutional trader managing money, you have to have a list of instruments or idea of what's going to move. And then you just look at those instruments to trade that particular day. And this is a process that you go in, out, and in, out. And as a human being, you're going to make mistakes because if you're going for 700 charts, there are some charts that look good, some charts that look bad. And what happens is that remember, trading is all visual. So if I'm going for a whole bunch of charts and they're junk, even though there's no strategy there, I'm feeding junk into my brain to a point when a good opportunity is there, I may miss it because I'm tired, or I may have gone for a whole bunch of bad instruments to influence my brain. So you could miss some good opportunities that way, right? So that was the tedious process before, right? That I was going through on the institutional side. Okay. Then, technology developed, things started moving, AI started, well, machine learning started happening and stuff like that. And what we call black boxes, gray boxes started getting created. In those scenarios, no longer do I have to do all that research. Now what's happening is I press a button, and this is what I do today. I press a button once the market closes. I now have a list of instruments that it has gone through, AI has gone through, our forecasting model has gone through, and tells me what I should trade tomorrow. So now, instead of me spending 4 or 5 hours at night, being tired, making mistakes and everything, AI is now going to go from a huge list of instruments, filter it down to a point. I have a subset of list of things that are going to move, which means following the market where the money is. And I just trade those particular instruments with my strategy. And that's it. So now I'm fresh when it comes to trading. I don't have junk being filled up in my mind at all. And I'm only trading the things where money is involved and I'm following the money. By doing that, it's a lot effective.
Of
And it
course.
means I'm spending less time now in research and trading and spending more time on the opportunities that are going to move. And I'm going to make less mistakes as a human being. So this is
Completely.
where that does. So for us now, it's pretty much use our scanners to forecast what's moving tomorrow, have that list, and now I'm going to basically just trade that particular list going into today. And
It
that's how I
is.
could see, Ryan, that's how I could go to conference.
Yeah,
Yeah.
it becomes very time saving. It's
Yeah.
something very similar in my case. It happened, but the with back testing. Specifically, now that there are systems that help you with back testing, register data and apply a Monte Carlo simulation, and generate like this changing a little bit what the market structure would be into different scenarios. Like if you, instead of just backtesting it for 1 year, it is like backtesting it for a couple of 100 years or something like that. It is much more effective when trying to get a specific statistics for your strategy. So in my case, it has been extremely helpful when backtesting strategies. I have a couple of different that I have been adding into my tools, into my strategies to get trades on a daily basis. And before it was very tedious, to register one by one in an Excel sheet and then getting the results, the percentages, and everything. And nowadays, there are systems that help you get all the results. They throw you all the results of the period that you backtested, and in addition, run through simulations with Monte Carlo simulations that can give you information, a lot of extra information and a lot of extra statistics that are going to be much more precise in that sense. So by only backtesting for a couple of months, you can really know if a strategy is profitable in the long run, right? So
Yeah.
in that case, for me, it has been also very time saving to apply these type of tools in my trading, and also by the systematization of my strategy through similar to an indicator, in the sense that instead of having to go through all the checklists before taking a trade, I have the tools that tells me when every confluence has been achieved and I am good to take the trade. Similar to what you were mentioning with the scanner of the different assets to trade the following day. So I believe that mainly what in this case, what is really helpful from AI and from all of these tools is time saving. And time saving translates into less mistakes, more precision, more accuracy, and overall better performance.
Yeah. I mean, you're using AI on the back end and not the front end. And that's the most critical thing because if you use it on the back end to save time, it's perfect. But if you use it on the front end, you could never develop habits. And if you can't develop habits, you can't trade probabilities. And that's what a lot of people are making mistakes is they're trying to use AI on the front end on the charting completely, and you can't.
Mm.
You have to use it on the back end, exactly what you said. Do back testing, find out the strategy, everything that works, and use that to filter out and then trade on the front end. And I think if you do that, it's going to be very effective, but it has to be used on the back end.
Completely agree. People, as you mentioned, people focus a lot on front end. AI to trade directly, to take all the trades, and I do nothing, and I can just watch my computer getting profits. But mainly, it will not be like that.
Yeah.
The main use, at least for us retail traders, is going to be on the back end. not really on the front end.
Yeah, on the front end, you have to create habits, right? You have to have consistent habits. And as markets keep on changing, the back end will change with the markets and adjust, but your front end habits have to be there. Your money management has to be the same in and out every day. Your emotions, everything has to be the same completely. So the front end has to be habits and it can't keep on changing as AI does and with the markets. And that's exactly what we do today is our models are set up where you have this black bar on the back end, it adjusts to the markets. But on the front end, when you're trading, you just see this black bar and you just trade over and over and over. And as the markets change, the code in the back end changes, but the front doesn't. So you develop habits as a trader, but now you have AI in the background that is filtering out all the mess.
Mm-hmm. Mm-hmm. Exactly.
Ryan,
Yeah.
can you give us your what do you think? Well, thoughts on this?
Manesh, you have more experience when it comes to AI, because you particularly have built an algorithm that works, that does, the magic for you, the bargain, like you said. So that's why I was just quiet and enjoying, allowing you speak to actually shed more light. But like you said rightly, yeah, the back end is where the bulk of the work for the AI should be, and the front end is the most important part for any trader. And like I said, everybody is trying to boycott the front end. People think AI is going to take away the money management, the risk management, the execution, the psychology. They believe it's going to take all of those things away. I'm still just going to sit on the fact that AI just enhances, So if you lose the front end habits, you're still going to lose money. And I promise you, the same way people had an issue when they get into trading and start losing money, and then they start to say things like, "Oh, trading is a scam, trading is gambling, you're going to lose all your money." And nobody ever talks about how, "Oh, I'm so indisciplined, I have bad trading habits, I don't learn well, I haven't sat down to back test, I can't even be honest with myself to say I don't know what I'm doing." It's the same way people are going to come when the real age of AI in trading starts to happen. People will come and say, "Oh, AI is losing people's money, or AI is trash, or AI doesn't work, or don't give your money to AI to trade." I've seen people use trading robots, yeah, sell trading robots to people, and people lose their money in a month. But the problem here is the parameters that you set for these robots, yeah. You tell these robots to trade in multipliers. So people use multipliers as high as 2x, 3x multipliers, and you use them on a small account. These robots have probably a martingale trading strategy and also a hedge, strategy. So the robot is buying and selling at the same time. When it's in loss, it's increasing its position size, and it's doubling down on every position sizing when it's in loss. So people really don't have an idea on how this robots work and all of these things, and they just want to buy and put their money into it. And sadly, at the end of the day, every good salesman isn't going to give you a complete whole detail about how everything works. The most important thing is he's trying to sell his product to you, and you're willing to buy because you want to make money. At the end of the day, you put your money, you lose your money, and you say AI is not working. And that's because a lot of times people don't want to do the front end. So if there would be any question mark, or if there would be any advice I would want to give to people who are developing algorithms and using AI to help facilitate trading better, would be, I think they should focus on giving pre-education to trading when that time comes. Let them be some sort of pre-education to trading. Oh, this is what trading is. You need to understand what risk management is. You need to understand what lot sizes are. You need to understand what trading strategies are. Then you sell, a product to someone, or you set up an algorithm that helps these people. Why that is so is now you've given the person forehand knowledge of what they need to know. So now they have a basic understanding of the front end. They know what they need to do. They now understand risk management. They understand how to manage their money better. They understand how to stay in the market longer. they try to understand market conditions. So they know when the market is bullish and when the market is bearish. So if for any reason one day you come to your system and you notice that your algorithm is selling when it's supposed to be buying, you can be smart enough to turn off the market and look at the market condition and say, now, where these sales are coming from is coming from a high demand level. I shouldn't be selling at this point. And you can turn it off and turn it back on when the markets are in your favor, or try to make trades in the favor of the market as at that time. Because like we said, there's no perfection. As good as AI is, someone had to feed this thing data. So at the end of the day, if a human being was responsible for feeding this thing data, and we all know that human beings are not perfect, then it means that there's always a 1% chance for a mistake. And that 1% can be very costly. I gave someone an example the other day. I said, imagine if when 9/11 happened, there were no traders on the trading floor in Wall Street, just algorithms. Do you know what would have happened to every hedge fund portfolio that day? Everybody would have been bleeding. But it was as a result of people paying attention to, fundamentals and macro events and, socioeconomic events that people could quickly see that, oh, this is bad for the country. This is bad for the economy right now. And people started to shut out positions and all of those things. A lot of people would have lost. Most hedge funds would have been dead by now. You get, so that is why I always say the front end, like you said, is important. And that's why the human factor can't, it's a very vivid word, cannot be eliminated when it comes to the financial markets or trading. So as much as AI is good, the front end still matters a lot.
And Ryan, believe it or not, on Wall Street, when 9/11 happened and even flash crashes, the institutions that had no risk department, they lost everything. The institutions that had a risk department, they're still here today.
Yeah.
And you said it perfectly. You got to teach the money management on the front end. That has to be the key. Doesn't matter what AI does at the end of the day, you still gotta, it's your money, you gotta manage it correctly.
Correct.
Completely. I
think
really
no
like
matter,
that example.
So just one thing, I don't think it matters how much years of experience you have. At the end of the day, even if you're just started, the key is money management. If you learn that, that's never going to change. Doesn't matter how many years of experience you have. That's the key part of being a consistent trader is the money management side. If you learn it from the very beginning, then you're good. If you learn it later in life, like I did, you will lose a lot before you get to that stage.
Completely. And I love that example of the 9/11 because overall the human psychology at the end is everything in the markets, and the markets are not is a social science. Like economy is a social science. Finance is a social science, so it will always have the psychological. It will always be based on the psychological aspect of the human beings. Therefore, you cannot replace the human being that will execute, right? I completely agree with everything that was mentioned, and I love that 9/11 example. It was very accurate. Moving on with the presentation, I believe we have covered the entire topic. It was extremely useful. I myself even learned quite a lot in this conversation. It was really amazing. The key takeaways that we can establish of today's conversation is that number one, AI is already shaping institutional trading, and it has been doing it for quite a lot of years. I mean, now it has this fancy word, as Manesh was saying, AI, but before it was called machine learning, and before it probably had other names, and it has been used for quite a lot. Of course, we are seeing improvements in this machine learning, in this artificial intelligence that, of course, is shaping even more the markets. We can see with all the examples giving, for instance, in institutional cases, mainly applied. And as you can see, most of the AI tools used by institutionals are, of course, for forecasting and mainly for risk. All of the institutions have something in common is that their AI tools are applied for risk department and risk management. So that's, as we mentioned, that is not the front end. that is the back end of trading.
Yeah.
So if institutionals are using it that way, it means something, right? Then the edge belongs to structured minds, not just fast machines. Structured minds, well-trained traders, well-disciplined traders, and traders that have developed the habits to actually be able to be successful in trading. And lastly, the future trader is a combination of the human machines symbiosis. It is not a replacement. We have been mentioning, and this last point, we have been mentioning it for the last hour, and it is that AI is not a replacement. Traders are going to still be here. As you mentioned, Rion, if AI have replaced traders, we wouldn't see any new hires for market analysts in banks positions. We wouldn't see any new hires for traders, for quant analysts. I mean, the trader and the human is still needed and will be needed in the future. It will not be a replacement, right? So now, without any more comments, we are going to go directly to the questions and discussion segment for this second episode of Valetax. So if we see any type of question, we can answer it and we can discuss about that. And finally, after that, end up our second episode of Valetax. So let's just wait if we see any type of question, or if we want to give any extra comment ourselves.
Okay, so before we get a question, I have a question for Manesh. Yeah.
Okay.
Manesh, would you say AI? Yeah. Would you say algorithms make traders better, or would you say traders make algorithm better?
That's a hard question. Because it's so diverse, because every trader is different. They have different personalities, right?
Yeah.
When a trader comes to our industry, what is their initiative? As we talked about it, some are lazy, where they're looking for that lottery ticket, right?
Yeah.
If they're looking for that lottery ticket, they're going to gravitate towards these automated robots, especially on the crypto side where all the biggest scams are happening, right? If they're really wanting to be a trader, then they're really going to go down a correct path. And the first path has to be is to find your model, which means exactly what Alfredo and you were talking about. Back testing has to be key, right? You have to find your model, see if it worked in the past. If it hasn't worked in the past, there's no way it's going to work in the future. So you have to do back testing, so you could use AI tools to help you back test, see what the historical results are, right? Once you have that model, now you could sit there and start to trade it, right? Now, there's two different approaches. There's one trader that wants to sit in front of a computer, right? If they do, they're going to trade a certain amount of instants. There's another trader that wants to take the rewards from this market and a little more long term and, but be a trader. So they're more like an investment type of trader. So in that scenario, they're going to be more diverse. So they'll look at a whole bunch of stocks, currencies, futures, cryptos, and a whole bunch of things because they're not looking to be a day trader or a swing trader, right? So either way, it doesn't matter. You take that model, you use that, you filter out the list of instruments that you could trade, okay? And then you go to the charts and you trade. But that trader has to have money management. I lost millions of dollars because I had zero money management. And the only reason why I'm here today is money management. And this is the same thing as we've been teaching for years. Until a trader learns money management, they will blow out their account. And I'll guarantee it and I'll bet on them against them. The moment they learn money management, then they'll sit there and move forward. Because you can't control these markets at all. And the thing is that they need to understand that. So from then so you could use AI to trade physically if you want, But there's different stages along the way as we are traders that you could use AI. You could use AI in the back testing. You could use AI to filter out a list of instruments to trade. And then you could use even AI to execute too. So there's different phases that we could use AI. And the question comes down to is, what are you comfortable doing? Like you're telling me to use AI to physically place an order. I'm not going to do that. Like with trading view, you have all the modules that directly connect to the broker. You press a button and it's going to automatically trade for you. I'm not going to do that. That's my personal preference. I want to control that trade. I want to see what that slippage is, what the spreads are, everything. So physically, I am not going to do that. I'll put alerts on my charts. When alerts get triggered, I'll look and I'll place the order physically, but I'm not going to have an order sitting out there. But that's my personal preference. We have students that want that full automation. And then you say, well, you want that full automation and you get slippage. Are you okay with that? They'll say, yes. Okay. Then you could do the full automation. Right. And so that stage, no. So for me, and that's my personal preference, right?
Yeah.
On the back testing, I don't use AI because I want to physically see things in my brain, right? I used to use AI or automated things like TradeStation. It used to be back in the day, you could program up your strategy and use that and it'll do all that stuff. But I don't want to do that anymore because there's slippage there. There's mistakes that the back testing modules can make and stuff like that. And of course, there's a lot of things today that are available today for back testing that's better than what it was before. But I still see mistakes.
Yeah.
So back testing, I don't. But the biggest place I use AI today is forecasting. Tell me what's going to move on the next bar. So if I'm an investor, I'm going to do the forecasting on the weekly. If I'm a day trader, I'm going to forecast on a 10-minute, a 30-minute, and stuff like that. Right. So those are things that you could do. So I have a list going into tomorrow. And typically what we do is we know we have a list of what's going to move. So if you're on a daily time frame, all I have to do is put an alert at the daily high or low. And then I do nothing until my phone gets alerted. When the phone gets alerted, I look at the charts. I see if it fits my strategy. If it is, I place the order, and I don't. I move out. Because the more you spend time on the chart, the more you're going to fail. Right. So I use AI to optimize my life now where I'm getting the rewards of trading, but I'm not there physically trading 8 hours a day because I want to spend it with my family. Right. So that's the reason now for me, trading in my personal aspect is keep the rewards from the markets, be a trader, get the rewards from this industry. But now I want to spend time with my kids growing up, be there for their events and this and that. So I got to a point where AI is saving me time, only looking at opportunities when they're occurring, and then boom, and that's it. And that's my personal preference to my goals and everything. But everyone has to find their own uniqueness and where they want to use it.
Yeah, that makes sense.
I
Thank
know
you
that's a
very much
lot
for
of
that
words.
explanation. No, I do understand and I do appreciate it. I really do.
So, I mean, at the end of the day, you, Alfredo, are gonna be around forever, right? You guys are young, you're still gonna be trading, and then, yeah, you may not have the years of experience I have, but you have the foundation of the real trader that's gonna be of the future, which is money management. And that's really rare. Because if you look what the institutions are doing now, which I don't agree, and this is where institutions are going to fail too, and this is where retails are starting to start to become ahead, is that institutions are hiring kids straight out of university and then throwing them into Python, the programming, all these models and everything. They're creating trading models with zero trading experience. And it doesn't work. And they started doing this once I left Wall Street. And you could see now there's a lot of institutions that come and go. You can't do that. It used to be where you had a guy at a university would watch the guy on the trade desk, see what he's doing, learning from him, learning how he's trading, learning, becoming a trading expert. And that's not happening. You're getting guys that are just completely going in and they're saying, okay, run the statistics, run the numbers. So it's a pure probability game. It's not going to work. You, Alfredo, me are the old traders, they call us, even with your age, but we're going to be around forever because there's no way this concept of hiring people with no trading experience to program these models is going to work. And I can tell you that right now. And let me give you an idea. I have the biggest programming background. I've been programming since I was 14 years old. Okay. I went into the institutional world thinking that you could automate everything. I left because I realized you can't. You can't replace the human brain. A computer can only give you a 1-to-1 reward risk ratio. Yes, with volatility, you can get the fluke and get more, but the human brain can give you more. And today, believe it or not, with all the volatility there, you could average a 10-to-1 reward risk ratio with this. So use AI to simplify your trading so you're not tired and making mistakes. And exactly to your specialty, Ryan, which is psychology of trading. So stay in the path of psychology of trading, money management, because that's really what you need there. And let AI do its thing on the back end and there. And you guys will be the few real traders in the world, and which will be in huge demand in the going forward.
Wow.
Because right now, the number of real traders are out there are slim.
Very, very,
very, very small.
Yeah, I believe that it became extremely trendy in institutional levels, the quant, and only focusing on the quant and the quantitative analysis and getting quants and getting these guys from math majors and from physics majors to get the quant. But a lot of them don't even, they know the numbers, they know the programming, but they do not know the markets. And I say it because I know people that work for firms as quant analysts and they're friends of mine. But when I ask them about markets, they don't really know much about markets. However, they are the ones behind every single trade that are in institutional levels. However, I believe that with this, we can end our second episode of Valetax. It has been extremely great experience, an extremely great episode, very interesting topic that we touched. Don't miss out on the next episode, the third episode of Valetax. Our host for this third episode will be Innocent, will be Rion. We're going to and compare risk or edge, kind of comparing which one will give you or which one is better, or the availability to combine both in that sense. It is going to be also very interesting to talk about, to discuss. And well, hope I see all of you in the next episode. Thank you, Manesh. Thank you, Rion. And thank you, all the audience, for watching this second episode. And goodbye.
Thank you. Thanks, guys.
Thank you, guys. Enjoy the rest of the day.